G'day, jet setters. Mate, well, I've got to laugh because I did a video like last week or whatever about what goes on and what's been going on the 17th and 18th trading days, US time, the last 4 months, right? And of course, it's started to happen again, right? And I like look around at some of the market commentary videos that are around the place, and let me tell you, 99% of them are full of shit, right? They're full of shit, you know. They look at the market in hindsight. They never tell you what positions they've got on. I worked in a trading room for like 20 years, right? I've never heard anyone in a trading room talk anything like any of these little day trader wieners. They want you to join their private chat rooms. They want you to become their private clients. They want you to sign up for this, that, the other. Mate, if they were such good traders, what are they doing taking money out of you to be a private client? It's a joke, right? It's a joke. I do these because, frankly, it's lockdown. I've got time on my hands because really I've made my money in trading 10 years ago, pulled up stumps, do it basically for fun, for shits and giggles. It's profitable for me, but it is shits and giggles essentially. And it's locked down, and so I'm a musician, right? And I got sick to death of seeing all these wankers pretending that they're big swingers in the markets. They're full of shit. Anyway, so the reason I'm posting this, I've seen a couple of them lately. I reckon they've seen my videos and they've plagiarised and they've picked up to what's going on the 17th and 18th of each month for the past 4 months. Let me tell you, if they were so good, they've been doing it for so many years, why didn't they pick it up sooner than after I posted my video? And they've only posted it like after all the actions happened, right? Anyway, and what's more, they haven't got it right. So that's the end of my rant. So if you want the truth, you're in the right place. If you want some plagiarists, Johnny come lately, who are frankly full of SH1s, go elsewhere. There is one though that I'd recommend, FX Empire. This guy, FX Empire, his name's Chris. He talks like an actual trader, right? Go to his stuff. There's no muck around. It's no wasting time. They're over and done with in a minute. Few key markets. He's the goods. Lower subscribers, right? Something about that, isn't there? Right. So this is what every man and his dog's talking about, right? This kind of trend line, which we're looking at breaking through. Some levels you could say we have. 50-day EMA. Blah, blah, blah. You've heard it everywhere. Some people have started to cotton on to what I've been saying. Good on them for coming late to the party. But they haven't got it right because they haven't looked at it in depth properly. I'm going to go down to like an hourly. In fact, I'm actually going to go even shorter. I'm going to go like 30-minute time frame so you can see what's going on. Right, this is back in August. Look at this, right? So this is the tick over Australian time, right? The 19th of the month at 5:30 in the morning here, 5:45, actually 6 o'clock, is the close of trading in the US session on the 18th, right? Go to the next little candle, right? The 19th at 11:30 at night, that's when the US markets opens for the 19th, right? It's off, right? There, it's off, right? Selling, has a clean out, buying, it's back, kaboom. When does the selling start? 25 bars. It's like 2 trading days. That's essentially what it is, right? Here, again, the 17th, 11:30 at night our time, that's the start of trading on the 17th. And it sells, right? And it goes down, in this case, from that high the day before, 2.5%. Now, the key things about this are, if you want to take advantage, you've got to be ready the day before, right? You miss like half the move if you wait, right? So these idiots, right, who've posted this stuff now after the move's already started, well, you've kind of missed half the money anyway. So you've got to be aware of these things beforehand, right? That was August, right? Here we go. Month before, July, same thing. Who would have thought, right? So this is, again, now we're talking the 20th here because the 19th was on a Sunday. We're talking good business days, right? Right, so it's the 20th, 5:30 in the morning here. That's the start of the trading It's on the 19th. Sorry, the 18th was at the weekend. So then it's off, right? You can adjust these for the weekend, so you can see how the trading starts, like on the 16th there, the morning of the 16th, like our time. That's when it kind of closes, and then it's off, right? That was in July, yeah. So it was Friday the 16th and Monday was the 19th. That's why the 17th and 18th, which is when this punter moves this market, who is big algo, big global macro fund, whoever it is, that's when they do it. Let's go the month before. Same thing, right? Here we go. So it's the close on the 19th our time. That's close of trading on the 18th. Here we go. The next day, so it's Thursday, Friday, so it's a Monday, which is the 21st. It takes off, right? When does it start? There's a bit of action before it, but this is when you can see the choppiness kind of starts. Same thing in May. Now, it had this action before it, but that didn't stop them doing the same thing. You can see here again, the 19th, 5:31, that's the close of trading in the 18th in the US time, right? Next day, the 19th, it's off. Same thing here. So that's the start of trading on the 17th, right? So it's 11:30 not here. So it's the 17th and the 18th. It's that takes place. Same thing, right? Every single time, but just for the last 4 months, right? And when we look at here, what happened here, of course, let's look at the candles here, right? So again, right? See, there it is, right? On the open, what did it do on the open, right? On the 17th? Oh, sorry, it's the 16th, because the 17th and the 18th is this weekend is Saturday and Sunday, right? So the seller is going to be on the 16th and the 20th, whereas Friday and Monday. And what happens? You need to get positioned the day before they get in it. This is essentially front running, right? If you understand the market. I don't know anything below privately. This is just all public information. But you've got to get these things, anticipate them and see what happens. Sure enough, it's sold off and then it followed through. Now the big question is, I guess, two big questions. One, is this seller that has moved the market like over 2 trading days, right, over the past 4 months, consistently so, are they going to move it another 2%, right? Or possibly up to 3%, right? So here, it's kind of there, a little bit lighter there. Are they going to force, with their selling, these kind of moves again, right? I suspect they could well, right? They could well do it, right? Or put this on position in case they do, right? Because you never know, right? The 17th and the 18th, which is the trading days they've traded around these previous 4 occasions, they might have brought it forward, right? They might have said, well, we're not going to do it over the weekend. You never know. They might have pushed it further out because of Friday. They might have said, look, that's, the futures expiry, the options expiry. There's too many moving parts. Let's execute Monday and Tuesday, right? But I've had global macro funds as clients in the past, in the US and in London. And the way they work is they have their investment meetings. I reckon these guys have them on the 15th. They do it at their trading desk. I reckon that's on the 16th. And they say over the 17th and 18th, 2 good days, you execute the order, limit, call it 3% down or whatever, right? And for the last 4 months, that's what they've done. Right? Now, the key thing is, are they going to repeat that pattern? I reckon yes. Well, I'm positioned so they are. I'm short the S&P. I'm actually short the Aussie as well because that's a risk-off kind of proposition. And I'm short the SPY, like the Aussie SPY, basically because I'm Australian, right? And the correlation is pretty close. So I'm short those 3 things. I've got a bond position on as well, right? But that's how I'm taking advantage of it. And it paid off on Friday. Right? I was up to like fucking 5 o'clock in the morning watching this sucker, seeing if it would break this level, right? Here, you can see it there, right? If it would break it. And it really had a good lash. It didn't crack it, right? It didn't crack it, but it tried very hard. There's something around about that 430 kind of level. Now, I guess the big clanger is if they go to push it again, let's call it like 2.5% from where they started from the open, right? If they do that, 2.5%, that's around about the middle of the market. If they do that, that's going to take it to an interesting point, which is bingo, right? The previous low. A lot of people when they look at the markets, high, 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 low, 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 high, high. What could this be? This could be a lower low, right? Now, I guess the $1 million question, literally $1 million question is, what is going to happen when or if these guys come through to complete their order on Monday, which is the 20th, and if they push it, cause some technical damage, is it going to be on for young and old, right? So despite what other these like little boys on the internet might say, that's actually what's going on behind the scenes. It's not related to this options expiry, which some people say, because this action happens on the calendar days, like the 17th and 18th. Of course, they're close to where the options expires and futures expire, where those witching hours happen, but it's not. And the big thing is the signal, right? The real tell. It's not so much the price action leading into it, right? It's two things. It's the price action at the time, which you can see is very, very bearish every single time. But the bigger factor is then the rebound. The reason why that's a factor is because when someone goes in there to do their business, right, they leave the stall, everyone says, okay, it's clear, off we go, right? And without fail, all these times, off we go, right? And so that is a tell, like a very strong tell to say there is a seller, right, in the market who is done their business, close business the 18th. Now that will be, because the 18th is a Sunday, that will be the 20th. So despite what, I've seen a couple of versions around this, one guy doesn't actually see that it's happened like for this month here. Another guy says it's linked to the options expiry, which it is not, right? But none of them actually go down to say, look at the days, and this is how the industry works, right? If you're a big fundy and you're saying, mate, the S&P is the top, index rebalancing, whatever it is, this is what you do. You have your investment meeting, you send your instructions to your traders, you give them a couple of days to execute because it's large volume. You've got to have large volume to move the market this far, right? And then when you're out, right? But if it's your view, the investment committee kind of meets again and they say it's still our view, it hasn't changed, right? So again, we're basically trying to work out what could happen based on this pattern. But it's a pattern without a doubt, right? Without a shadow of a doubt. So all you can do is be prepared for that. And so what I'm short. I've got some stops in case it comes back. I'm going to be up into the wee hours Australian time watching what happens in the US trading session on the 20th with great interest. If it cracks this, bingo, for me, that's going to be, God damn it, I was right for once. Like all traders, any trader, mate, you've had a bath. And I've had a lot of them, right? As I said, this is education only. Do not trade these markets unless you are suitably qualified and you are dealing with someone that is suitably qualified. CFDs, they're retail. Don't touch them. They're a joke. 70% of CFD traders dust their cash, and I reckon it's even higher than that, right? I trade using futures. They are highly leveraged. They can be very expensive when you get it wrong. Trust me, I've got it wrong. So be very, very careful in terms of what you do in these markets if you're going to trade. Let's face it, if you're in equities, the best trade you can ever do is just buy a good company or buy an index with cash, without leverage, and just sit on it until the day you die, right? That's the best thing you can do. Equity markets, they just go ride the swings, right? This is not for the faint-hearted, not for the underqualified, not for the teenage boys in your bedroom, not for the people that, talk a good game and think they're goddamn experts and want you to join their stupid little chat rooms. This is serious stuff. So my educational tip for today, look back for patterns, right? Understand the industry, how people are going to do it. And most importantly, if you're going to trade and punt around these markets, be really, really careful, right? Because you could get really cleaned out. Because even this, right? I could be wrong, right? And this thing, maybe these guys bought their selling like a couple of days forward, right, to surprise the market, right? And maybe they've done there like 2.5%, 3%, right? And it's going to come screwing back tomorrow. I don't know. Maybe it'll just go down here. Great, I'll be happy for a day, and it'll scream back new highs. I don't know. Maybe it'll come down here and it'll like zoom down to like 4,000. I don't know. I don't know. You don't know. No one knows, right? But that's all I can do is say these are some patterns that have happened like clockwork the last 4 months. I'm positioned to see if they happen again. All right, for anyone that's watching here with your little wiener channels wanting to get subscribers to join your chat room, all the best. Copy my best ideas and don't screw anyone, right? Because if you're a serious trader, you wouldn't be running a stupid little chat room. Okay, all the best. Catch you later.